topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk 4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, welcome in. It's a great Monday morning after a wonderful holiday weekend, Independence Day. I hope everybody had a great weekend celebrating this country's founding, and spending the next year, let's really think about, what independence really means, to this country and our freedoms and the rights that we have provided by the Constitution that was put in place by the founders of this wonderful and great country. And as we go into our 250th year, which we'll get to celebrate next year, it's just amazing where this country is and how far it's come, and the freedoms that we get that many other people across this world do not get in their own country, and we should celebrate that fact. But then we got rules to live by. What's in the Constitution, what has been written by our congressmen, signed into law by our presidents, and then the wonderful executive orders that come out interpreting supposedly those laws as well. I've always mentioned that sometimes I felt like if I could have run for president and been king like some past presidents felt like they were, hey, I would have run myself, but hey, I no desire to lead this great nation, leave it up to other people, support those that should be there or support those that are in office currently. What we're talking about today is now IRS rules. What guidance do you have on what's taxable, what's not, and the different rules that the IRS has that you should not be ignoring as far as income and what is considered to be taxable by the wonderful IRS. IRS is that be all end all badass collection company that's out there that enforces the rules and the laws of this country to get taxes paid in so that we can pay for protection, defense of this great country, and everything else this country does. And maybe if we go back to those founders originally created and put the federal government only in charge of the things that were in that Constitution and not let them get outside of their bounds, we wouldn't need as much in taxes today that we have to support this great nation. But we also are tremendously in debt because free giveaways seem to continue regardless to get the votes to keep people in office, and basically taking money from one person or everybody and giving out to others. Hey, that's my soapbox for today. Let's get off the soapbox and let's get back to what's income. If you receive a gift from a family member, those are not taxable to you. But it could be taxable to the person giving it. So receiving a generous cash gift, the IRS isn't going to tax you for it. It's the giver who needs to worry about filing Form 709 if the gift exceeds that $18,000 per person in 2024, and that's going to go up a little bit in 2025 and continue to go up in 2026. You, the person that receives it, are not going to owe anything unless that gift was secretly or a payment or income, purchasing something from you. Then that gift could be taxable. We're going to take questions here today. If there are questions about the one big beautiful bill, we're going to address all those questions next week. And we are going to interpret a lot of the tax code in that one big beautiful bill next week. Harold, I'm going to answer this question today, but if we've got more questions on this, we're going to go in a little bit more in depth on this. We're going to spend the time this week studying this one big beautiful bill that we didn't spend the time studying over the weekend because it was our holiday weekend and we were kind of enjoying that with family. Had a lot of family in town staying with us, so we were concentrating that there. But Harold was asking, with this new thing that passed about each child born in the U.S. gets $1,000 put into a fund for them, is that going to be taxed and the parents have to pay? How's that going to work? I do not believe it's going to be taxed, but again, I'm going to get into this bill in depth over this next week so that we can spend a whole show talking about one big, beautiful bill. What's in it for you, and I, and others? What tax surprises did they spring upon us? What are they doing to save you and I money? The one good thing that I can say that I know about this bill is that it made permanent the Trump tax cuts. So we don't have to worry about reverting back to the old tax code come 2026. So that I know was in this bill, and that is a wonderful thing for you and I, tax preparers, taxpayers, everybody across the board. So, we're talking about an income. Now, let's say you're doing some work on the weekends or a side hustle. Is that taxable income? So does your weekend gig count as taxable work? If you are over the $600 threshold for 1099Ks, then yes, you're going to have possible taxable income. It includes, if you got money coming in from Venmo, Zelle, PayPal, that could possibly be all income. Now, if you're transferring, between families, somebody's reimbursing you for gifts and stuff, you may have to track it depending on how much money you have moving through, these things like Venmo, PayPal, Zelle, because certain reports are going to go to the IRS. We have seen 1099Ks going to the IRS, and then the IRS coming back and saying, hey, you haven't reported this income. Then you'd have to go back to the IRS and say, hey, this is show proof of transfers for family or whatever. But if you're making money and you have money coming in, you'll need to report it. And then not only report it, then you'll be able to write off the write-offs against it. Now, remember, it could be just a hobby. And if it's a hobby, if you make any money, it's still taxable. If you're losing money, you only get to write off up to what you made. So you don't get to write the losses off there as well. So keep a record of what you have going on so that you don't have to scramble when it comes to tax time. Hey, Francis, thanks for the question. Are gifts taxable? As we were talking right at the start of this thing, gifts could be taxable to the giver, but not the receiver. Now, something that I would recommend is make sure that you keep documentation of gifts that you received. Because if you happen to go through an audit, the IRS will ask proof of gift, proof of information. So if they're giving you, let's say, a check and it's for a gift, make sure you keep a copy of that check so that you have support. So, you want to keep it with your tax return so that you have the information there and handy if the IRS chooses you for some reason as an audit. Now, and that doesn't matter what the dollar amount is, because if you go through an audit, what the IRS does is it goes through and gets all your bank statements for the year that they're auditing, adds up all your deposits, and then they check it against maybe your W-2 income. And then anything that's above that, they all of a sudden decide it is taxable income. It's amazing how this works. See, this is not a court of law where you're innocent until proven guilty. You're guilty until you prove yourself innocent with the IRS. And that's the way basically the IRS looks at it. Here's all the money that came into your account, and here's what you had reported as income. And then this is the difference, so therefore it must be taxable. So you'll need to show them, hey, I did a garage sale, I did this, I had a gift given to me. These are the things that, make this money non-taxable, because these are not the items that should be on there. Hey, you may have kids in college. Are kids' scholarships taxable income? And we're going to discuss that right after this break.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Scholarships, scholarships, scholarships. Man, when you get kids in college, you really appreciate every dollar that your child gets in scholarships. It really helps offset some of the costs of sending a kid, to school for their education. My daughter is going to Texas Tech, and she gets some good scholarships because of the grades that she pulls and the grades that she had in high school as well. And as long as she continues to pull those grades, she continues to get those scholarships, which is fantastic. I have another son that's going to physical therapy school for his doctorate. He gets a little bit of scholarship money, but every dollar of scholarship money that he gets, he appreciates, because it helps offset some of the costs of going to school. And you don't have to possibly come out in debt, especially when you are in a doctorate program and looking to come out and become a physical therapist, in the future. And it's the same with my daughter at Texas Tech. In her undergraduate, the scholarships, provide a good basis to pay for a lot of the expenses that are at the school. But are these taxable? Now, the scholarships you receive as a candidate for a degree at an eligible educational institution, these funds for qualified education expenses, which include tuition, fees required for enrollment, course-related expenses like books, supplies, equipment that are required as a student in the courses that they're taking, those funds used for those expenses, qualified education expenses, are tax-free. Now, if you receive scholarships greater than those tuition and fees and books that are required, you get enough money to help pay for accommodations or travel, it gets taxed just like regular income. So that means if your award covers your dorm, your meal plan, you'll need to report a chunk of that on the taxes as income. So you kind of got to remember that it could be taxable income for those scholarships based on what they receive. So that means if your tuition and fees were let's say $7,000 for the semester, and you only receive $5,000, there is no taxable income. But if the tuition and fees were $7,000 and you received $12,000, $5,000 of that can be taxable income. So, there may be things there where you've got to report income based on the scholarships that you have received. Hey, good question. And matter of fact, one of the things that we're going to get out here, Eller, when I sell random things, do I have to pay tax on it? Well, if you're getting rid of personal items like clothes or old tech things like cell phones, those aren't taxable, provided you sold them for less than what you paid for. That caveat that the IRS puts on there. If you're making a profit off the item, selling it for more than what you paid for it, then you've got taxable income. But if you're getting things and automatically reselling them all the time, and basically running a business selling odds and ends and stuff, you may be treating it like a business and it may be income. So the IRS is going to look at some patterns that you have as well. What do you consistently do? Are you consistently buying items? Maybe you wear them once or twice and then turn around and sell them, and you're selling them for more than what you paid for them, then obviously you're probably in a business. If you're continually just selling them for less than what you paid for, you may keep track of what you're buying and the expense of it, so that you can prove to the IRS, if they came out and audited you, that you were selling them for less than what you paid for. It's all things to think about as you're going through this. If you're consistently doing this and you're showing a pattern of buying and selling things, then you're probably in business doing it. It's something you've got to really take a look at. Talk to your tax preparer. Show them what you're doing. Show them the income that you're making. Maybe show them the losses. Maybe it's just a little hobby you've got going on and you're not making money. Then you may only be able to deduct up to the income that you have coming in, because a hobby is only subject to losses up to your income. So little things that are out there. Hey, bartering. People barter, meaning you're basically trading one thing for another. Maybe you're trading your haircut for doing some design work on their website. Maybe somebody's doing some landscaping for you and you've done some bookkeeping for them. Or maybe somebody else is providing you a service and you're turning around and providing them goods or services in return. Or you run a restaurant and somebody comes and takes care of cleaning or landscaping, and you're giving them some free food and they were giving you free service. Hey, that's bartering. And guess what? That's taxable income. you both parties are going to owe taxes on what they received. And the value of that service swap is treated like income. Even if no money changes hands, you should track those trades. Now you get the expense to write off against it. So if you're providing the service and you're paying for the labor on it, you still deduct that cost of the labor, but you report the income that would have been generated for them if you would have charged them. As well as, let's say you were doing this for a restaurant and they gave you food, they still deduct their labor and they deduct the cost of food and report what would have been or should have been the income from that. So bartering does have possible income as well. So, it's one of the things that you've got to look at. All right, another great question about what is taxable. Jimmy, credit card points, are those taxable income? I received a bunch of points from a credit card company when I signed up. Is that going to be taxable when I use it? All right, so basically it goes like this. When rewards come as a percentage of spending, like 1%, 2% cashback points from purchases, they are not taxed. Those are actually viewed as rebates. Now, you get in some trouble when you start and you receive a bonus just simply signing up for opening a credit card without meeting any kind of spending requirements. So if you signed up for a new credit card and they immediately gave you 10,000 points or 100,000 points, but you didn't have any spending requirements to get it, then you possibly have taxable income. But if you had to spend money, let's say you opened up a new credit card and you had to spend, $5,000 within 6 months on the card, and then they reward you with the points. Again, that's considered to be a rebate, and that's not taxable. Now, here's the thing. If you're in business and you're using these points to reduce the cost of goods that you're buying, you've just reduced the expense of that goods. So it lowers the write-off amount. Points aren't technically taxable, but the cost of those goods was then nothing. So it's better to use those points to pay for things that are personal. Maybe you can, do this to buy lower cost of travel, maybe buy lower cost of a gift card or something, and you get the gift card and then you can use that. So we sometimes use gift cards from our points in the business to reward employees and give them a gift card, maybe at their birthday, holiday, or something like that. So, you've kind of got to look at how this is going to be reported or how it's going to be looked at, how you're earning it. If it's just a rebate, hey, we don't worry about it. If you just signed up for those cards and you got that extra huge bonus just for signing up, you may want to report it as taxable income out there. You found money. Does the IRS call that taxable income or not? And we're going to address that right after this break.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for you. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, speaking of trucker tax tools, last week, we were working with a couple of carriers out there that do a lot of leased on drivers. So if you're a carrier that has a bunch of leased on owner operators, hey, give Trucker Tax Tools a call. We've got a special program for your drivers. So give us a call at 877-966-2477. If you're leased on somewhere and you're looking for a great bookkeeping company, Trucker Tax Tools is a great company to work with to get your bookkeeping and your taxes done. Me being the president and founder of Trucker Tax Tools, I write for a great magazine called Landline Magazine, do articles all about trucking and taxes. If you get in the magazine, make sure that you go back and read that article that we put out each and every magazine. They keep those even on their website for many, many years, and you can find our articles there. Everything from discussing bookkeeping, taxes, per diems, corporations, should I be an S corp? All that is covered in the magazine by us. And then I also go to OOIDA, Owner Operator Independent Drivers Association, and speak at the Truck to Success seminar, talking to truckers about their bookkeeping and taxes, entity formation, lease purchase, depreciation, you name it, we're talking about it. It affects you financially and on your taxes. Be back there in October up near OOIDA's headquarters in Blue Springs, Missouri. So if you're looking to get out and be an owner operator, it's one of the great events you should actually attend. And whatever questions you don't get answered in the seminar, I'm usually in the lobby of the hotel every evening, talking to truckers that want to learn more and know more about their finances, bookkeeping, taxes, and everything else that's around trucking. And I get to learn more about you guys in the trucking business. But again, if you're running a company and you've got leased on drivers, whether it's 1, 10, 20, 50, give us a call. We've got a program for your owner operators, 877-966-2477. It benefits you as well because you know that your owner operators are getting their taxes and bookkeeping taken care of, and helps them with their finances to know that, hey, they're going to be around for a good while working for your business when they're taking care of things the right way. We were talking about found money. Does the IRS call it income? You stumbled upon $500, $1,000. Maybe you got a surprise payout from a class action lawsuit. That's all considered taxable income. I'm sorry, my friends, it's taxable income. Even gambling winnings, no matter how small, should go on your return. IRS does not ignore in any way, shape, or form any unexpected cash, and neither should you. Now, how many people do I know that found money are going to tell their tax guy that I found $1,000 laying on the side of the road? Not many. They go spend the cash. Should you? Yeah, according to the IRS, absolutely. You had gambling winnings. Hey, you've got to report your gambling winnings. The casino, depending on how much money you made, or the lottery, depending on how much money you made, is going to report it. And so if you've gotten that W-2G and you got reported gambling winnings and stuff, guess what? You're going to have to put it on your tax return. Now, you can write off, if you are itemizing gambling losses up to your winnings per event. There are different ways of being able to write off what is out there. So talk to your tax guy or gal and get the lowdown on what you've got to report for gambling winnings and everything. Life insurance. We get this question quite a bit. Somebody has passed away and there's life insurance payouts. Those generally will skip being taxable. That lump sum you get is typically tax-free. There are things that will shift if you're getting delayed payouts and getting interest. The interest is going to be taxed on that. The principal is not. If the policy was transferred to someone else before death, then parts of it could be taxable. There's a lot of specific rules to this. If you've got a life insurance policy through your business and you've been deducting the life insurance premiums, that may be taxable income to the business or the person receiving it. So you don't want to be deducting life insurance premiums that are paid out on behalf of the owners or key members of your staff or key man in the organization. So you need to watch what you're doing, how you're doing it, and whether you're making it taxable. Talk to your tax guy and see, is this going to be taxable if I do it this way, especially operating in a business. Now we get questions about court settlements and getting payouts. And maybe you've been involved in a lawsuit. Are they taxable? Yes, they could be taxable. So money from personal injury cases for physical harm is going to be generally exempt from tax. However, payments for things like emotional distress payouts, punitive damages, are usually considered taxable income. Now, it all depends on why the money was awarded. So you've kind of got to look at your breakdown of your settlement. See, these companies, when they go through and settle, want to make sure that this is deductible for them, but taxed to you. Because they want, if they're going to settle, they're going to want the deduction. So they're going to be more apt to put it for emotional distress and possibly punitive damages because it's taxable to you and deductible for them. But personal injury, physical harm, is not going to be deductible as the business side. So, they're not looking for the settlement to go that way. Now, if they're paying in addition for, let's say, medical expenses and stuff like that, yes, it's going to be deductible for them as the party paying it out and not reportable income to you. Hey, your employer just gave you a gift. Is it taxable or not? Now, you as the employee don't really want to have extra taxable income, would rather it be tax-free. So the holiday bonus or a gift card you get from your boss, maybe he's not just cheerful. It could be taxable compensation. So in the IRS's eyes, if it has monetary value, it's income. Now, non-cash gifts under 25, like maybe a ham, turkey, chicken, fruit basket, cookies, that's going to go through. You receive that as a gift. Anything spendable should be hitting your W-2. So we may give out a gift card, of like $25 or something to our staff, or hey, if we did gift cards through our credit card company with our cashback points, then we just give it to our staff, and it can be a $50 value or something like that, because it didn't cost us anything. We're not deducting anything, so therefore, to us it's non monetary value. It was just a rebate of the points that we got. So you kind of got to look at it. If you are an employer and you're going to give your staff some money, then it most likely needs to be a bonus through W-2. Hey, there are new trends, new things that are going out there. Kickstarter, crowdfunding, things like that. Is this free money or is it income? And we're going to answer that question right after this break.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
All right, so you raised money through some crowdfunding, GoFundMe, Kickstarter. I don't know the other ones that are out there. Is that income? Yes, no, maybe. That's really the answer. If it's truly a gift to help you get started through, let's say, GoFundMe, it may not be taxed. But if you're using Kickstarter or crowdfunding somewhere out there and you're offering perks or services in return, it could be treated as business income. So you're using Kickstarter and you're having a product out there and you get these people to put up money and they're going to get the product back. That's income. All they did was pre-buy the product to help you get started, to get your inventory, and now you're giving them inventory. So therefore, that is income. If you use crowdfunding and they get shares of your business or something through this, then it's not income, it's an investment. So you kind of got to look at what is the person that's giving you money getting back in return. If nothing, or an investment, then it is not income. It may be a gift, it's an investment. If they're getting a perk or a service or discounts because they are out there, it could be considered income. So you need to watch what you need to do. Hey, the next one we got, health savings accounts. Is that taxable income when I withdraw it? Technically, no. As long as you are using those health savings accounts, HSA funds, for approved medical expenses, it is completely tax-free. Now, the beauty of this is you've put the money into your health savings account, tax-free, and you withdraw the money, use it to pay for medical expenses, tax-free. But if you take that same money for something unrelated, before you turn 65, then you're facing income and it's taxed plus a 20% penalty. But if you strictly use it to stick to your health-related spending, it's tax-free. Hey, it's a beautiful way. If you've got a family plan and you can put money into an HSA, and it's an HSA qualified medical plan, and you're putting that $8,000 plus into this plan every year, you can save that money and use it towards your deductibles at future dates. And if you don't use it, it continues to accumulate out there, for you, so that you can use it at a future time when you need to pay medical expenses and you got the tax deduction in the current year. And as long as you're using it for medical expenses, it's not considered to be taxable income. And then you can apply the rules once you hit 65. That may have changed in the one big beautiful bill. I don't know yet. We'll double check that and have that on here next week. But if you're using it for medical expenses, you're going to be able to do that. Debt forgiveness. That can trigger a tax bill. Yeah, if it isn't bad enough, you were in debt, insolvent, and you got debt forgiven, nothing like kicking you when you're down, and now it's considered to be taxable income. So if a lender cancels your debt, you might owe tax on the forgiven amount. That includes your credit cards, unpaid loans, foreclosure differences. There are exceptions out there. Like if you went through bankruptcy or if you got qualifying mortgage relief, in most cases, those can be avoided being taxable income. But canceled debt is treated like income you kept. That's right. Now, you might be able to prove that you're insolvent and you were completely insolvent at the time of that and be able to get around it. But you need to talk to your tax preparer and make sure that you get the I's dotted, T's crossed, and get the income to where it's not taxable. Rental income. Well, we all know rental income. If you're renting out a house or you're renting out, you have maybe office buildings or whatever, you're running a business, you do have rental income. But let's say you got guests staying with you and you're charging them income. Whether it's in your second home, maybe you have a small home outside of your home out there in your basement, or you're doing it as an Airbnb, it is taxable even for short stays. That includes your cleaning fees and extra guest charges, but there's catches. If you rent out your home fewer than 15 days a year, you may owe nothing. It may not be taxable income. So there are differences and different ways to be able to get income from your home. Let's say you're going on vacation for a couple of weeks and you lease out your home through Airbnb for those same 15 days that you're gone. Well, that income is not possibly not taxable to you, and it just helped pay for your vacation as well. So you got a win-win. So something to look at. I know my sister has done that before. When she's gone on vacation, she's managed to rent her home up in Indiana for a couple of weeks. She's right near Lake Michigan, so she's got a beautiful home, beautiful view, and she was able to rent it out for 15 days in tax-free income for that period of time. But maybe you've got somebody you're helping out and they're paying you a little bit of income and they're staying with you for most of the year, or for 6 months, 3 months, whatever it may be. Yes, you technically should be reporting that income, and then you'll be able to write off what expenses you have against it. That's not an all-inclusive of everything what the IRS may count as income. We tell you to look at what you're doing, talk about your tax issues and what could be happening with your tax preparer, tax advisor. If you are generating income or money coming in any way, shape, or form, always sit down and talk to your tax advisor and get some input on what you need to do to be able to write off expenses against this income that you have coming in. And I say this also because we've got many people that have come to us that have been gambling, and maybe big gamblers, and they gamble consistently, and they want to write off all their losses. Well, and they have a lot of winnings. And when you have to look at the IRS rules and how you write off gambling winnings versus the losses, and then you're trying to do it on itemized, because you've got to itemize these deductions, and you're not getting above the standard deduction, well, it doesn't necessarily do you any good to do it. But maybe you're now a professional gambler and this is what you do, then maybe you're running a business as gambling, and you may have to write it off in a different way. But you need to talk to your tax advisor to make sure that you're doing this right. Let's say you're breeding your dog because you have purebred labs, and you get into breeding your lab and selling the puppies. That is taxable income to you. Now, beautiful part is you get to write off the expenses of the dog that had the puppies. So food, veterinarian bills, and things like that become a write-off if you're running this as a business. Now, if it's a hobby, you only get to write it off up to the amount of income you receive. But again, it's income that you receive, and you do have the tax write-off out there. So if you are in the breeding business, then, even if it's considered to be part-time, maybe a hobby, it's still income, and you still got to report it, but you get the benefit of writing off as many of the expenses that apply to the dog that is there. We used to breed dogs, and we used to breed labs. It was really fun for us, and we enjoyed doing that. And we would sell off the puppies, but it gave us the write-off of the expenses of maintaining the mamas there at our house, and we were keeping them for breeding purposes, and they were family members as well. So it was more of a hobby, and we'd write off what we could. Hey, truckers. There are certain things in taxes and stuff that you get write-offs of. Make sure whatever you do, you find somebody that knows the ins and outs of trucking. Make sure somebody knows all the write-offs for truckers. Ask them what a lumper is out there, and make sure you get good bookkeeping and taxes. Hey, our other great sponsor is Taxation Solutions Tax Relief. IRS problems? Hey, they're not a problem for Taxation Solutions Tax Relief. Get the IRS settlement that you qualify for. You heard about the Fresh Start program. It's a program done by the IRS. Not a lot of these other companies did not create the program that they make it sound like they did. We all work within the programs of the IRS and get you the best settlement, the best deal possible, allowed by law. Now, we help you redo your finances and work with you to try to make sure you're going to qualify. But the only way to do that is to pick up the phone and call us at 888-930-1016. Again, 888-930-1016. Whether it's your business going through tax problems, whether you're personally going through tax problems, or it's a combination of you and your business, don't let the IRS walk all over you. Stop the IRS now by calling us at 888-930-1016. Or go to taxationsolutions.net, and you can put in your information and get a free, no obligation consultation. Hey, I appreciate you being with us. Tax Talk for You. Go to taxtalkforyou.com. Follow us there. Go to Facebook. Follow us there. I thank you for being with us. Have a God bless and awesome and glorious week. I look forward to seeing you next week when we talk about President Trump's one big, beautiful bill and the tax changes that are going to affect you and I, everything from no tax on tips, no tax on Social Security, and how it's going to impact you in your life with the rules and regulations of the one big, beautiful bill. And we'll see you next week right here on Tax Talk for You, W4CY Radio, every Monday, 10 a.m. Eastern Time. See you next week. God bless you. Have a great week.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at taxtalkforyou.com. See you next week at W4CY.com.